Good morning. Welcome to Market Day Report. All right, we finally have made it to a Friday. And we do get a report from USDA. That report today, the big one, out at 3 o'clock Eastern, cattle on feed. More on that in a moment. First off, let's go to the overnight trade action. We'll start with the corn market. And an overnight trade lower, except for the December unchanged at 453. One thing that has really caught my attention here as of late, past couple of trade sessions, is how tight a range we trade in. And that December contract within a penny 3/4 trade range. So not a whole lot of movement, and even roll up to that May contract, and it's less than a 4-cent trade range. What's happening there? Well, we'll find out in a moment. Brian Hoops will join us. Soybeans overnight lower, down a penny and a half. And for the wheat market, can they rally their way back and end the week like they started? July Chicago, 574 3/4, penny and a quarter higher. And hard red, which had such a big gain to start the week, lost quite a bit over the last two sessions, 603 3/4, up 2 3/4, and then Minneapolis, December, two higher, 653 1/2, and the cotton market down 31 more points, 69.05. All right, let's go to Springfield, Missouri. Brian Hoops, Midwest Market Solutions. Is it just me, or are we really trading in very tight ranges right now?
It's not just you, Tony. We are trading in tight ranges and going almost absolutely nowhere in a lot of these markets. It's very choppy in the grains. We're a lot of days we're trading two-sided, and some days it's one day up and down the next day. It's just very directionless, and I think very frustrating to the trade because you don't have a market or any of these markets that are really trending, speaking of the grains specifically. So there just isn't a lot of fresh news, I think, to drive prices one direction or another. Soybean exports have slowed considerably, as we saw in our export sales number yesterday. Corn numbers are still very strong, but they're likely to start slowing as we're getting more and more harvest activity. Argentina's corn harvest is up to 9% done nationwide. Brazil's first corn harvest almost complete, and then the second corn crop is being seeded. And once that starts to hit the market, then we really expect a slowdown in our corn exports. So we've got another window here, another 30 days or so, 45 days, where we can say the U.S. is going to be the #1 source for the world's needs. And then after that, we start getting shoved aside, and our attention turns more towards planting acres, weather during that planting season, and that's what the trade will really start to be focused on. But a little disappointment yesterday with the wheat market. It traded lower. We had cancellations and marking year low in sales in the wheat, but a lot of that was rolled into this next marketing year. So not outright cancellations, but it was moved into the new crop marketing season. So wheat market was looking for a reason to go down, I think, and it found it yesterday. And today, I don't know what reason we're going to find to trade one way or the other. April grain options go off the board today. That's usually not a major mover, so it could just be real choppy trading type affair again for corn, soybeans, and the wheat markets.
All right. Hey, Brian, let's take a quick break. We'll come back in a moment. We'll talk livestock futures ahead of that report this afternoon. Market Day Report continues in a moment. Cattle on feed report. It's set to come out at 3 o'clock Eastern time today. We'll talk about that in a moment. First off, how did the cattle market end the day yesterday? You want to talk about the opposite of what we have been seeing in the row crops. Look at this live cattle market. Every contract above 201. The lowest trading one was October at 201.72. And then April, the high at 208.47, gained $1.65. And I haven't heard that we've got any cash cattle yet this week. So that could prove very interesting. The March on feeders, 288.35. It's $1.52 higher, 293 out on the August. And then the hog trade going the opposite direction here, down a dime on the May at 88.60. Brian Hoops is with Midwest Market Solutions. Two things: cattle on feed, cash cattle. What's moving the market?
Well, expectations for this cash market, I think, are moving the futures higher, along with expectations for a bullish report this afternoon. We haven't seen any cash trade, as you mentioned. We're hard to even find many bids out there. Their asking prices are 207 in the South, but it's not that unusual during a cattle on feed report week to see the cash trade develop later in the week surrounding that report. So we may not see anything this morning, may come later this afternoon. Now, feeder cattle have hit contract highs, I think 7 out of the last 8 trading sessions, and we'll try and do that again this morning, I'm sure. We're seeing big moves in the live cattle as well, just on expectations for this cash market. But you look at the cattle on feed, what it's expected to say, should say placements are down 14 to 15% from last year. On feed numbers tighter than last year. All that looks very friendly for the marketplace. I think one thing that the trade will be looking for is if we get a little bit of a report that's not as bullish as expected, or the reaction on Monday is not a bullish reaction. If we pull back, I think there'll be a lot of buying interest coming into this trade once again from the spec community, who's seen a market that's actually moved higher and is trending higher, and they want to get on board on that train that is moving higher. So there'll be, I think, a lot of buying on any corrections that we witness.
Yeah, it could prove to be interesting after 3 o'clock Eastern time today. Well, come back and see us Monday. The dust might be settling at that point. Again, it's Brian Hoops, Midwest Market Solutions, here on a Friday morning.